Have you ever wanted to know, how do insurance companies come up with the price of insurance? Yeah, well, you're about to find out. I got 2 words for you: actuarial science. Actu who? Now, before you go grabbing your dictionaries, it's not as hard as it seems. Now, actuarial science is a composite of analysis and stats that insurance companies use to determine how much an insurance policy is going to cost. It's also used to determine how much risk an insurance company is going to take. You need to understand that getting insurance is literally the process of transferring financial risk to the insurance company. So instead of you having to save a huge lump sum of money to cover the cost of a major financial event, you can transfer that financial risk to the insurance company by simply paying on a policy. In exchange for paying on an insurance policy, the insurance company will pay out a check when you pass away, also known as the death benefit, pay out a check if you get severely ill or injured, also known as living benefits, also pay out a check if you borrow money from your insurance policy, also known as cash value. If you can't tell already, my clients like receiving checks from their insurance policies. It's a matter of financing a policy to receive a lump sum payout rather than trying to save up money for an extended amount of time and not meeting the goal. Now, when it comes to insurance companies, this is a business, and this industry has to make sure that they are not taking on too much of a financial risk to avoid financial harm like bankruptcy, accumulating debt, and not being able to pay out claims on time. So insurance companies put stipulations in place to mitigate financial risk. Some insurance companies take on more financial risk than others, so it's a matter of finding the right fit for you. Alright, so to put things in perspective, let's say for instance you owned an online store. Now, what would happen if the order started to come in, but you don't have enough inventory to keep up with demand? You'll get overwhelmed, all orders won't be fulfilled, customers will be unhappy, all because you didn't prepare for taking on too much risk. Likewise, if insurance companies took on too much risk, they will be financially behind, they wouldn't be able to pay out claims on time, debt will pile up, and eventually the company will go out of business. So now that you understand the fundamentals, let's break down the 4 components that determines the price of an insurance policy. Number 1, your age. It's simple. The further you are from the average life expectancy, generally the less risk you pose to an insurance company. This is the reason why it's stressed to get insured sooner rather than later. Number 2, health. The more in shape you are, the less medications you take, the less health conditions you have, you generally pose less of a financial risk to an insurance company. 3, gender. Women on average live longer than men. So generally, women pose less of a risk to an insurance company. All things considered, if a woman and man had the same health and were the same age, because women on average live longer than men, generally women still will pose less of a financial risk to insurance companies. And 4, coverage. The more coverage you want, the higher risk you pose, because that is more money that the insurance company is required to pay out. Pretty self-explanatory. So these are the 4 components that make up actuarial science. Now, that wasn't too hard to understand, was it? These are some of the key factors in determining the price of an insurance policy. Now, if any of these components currently don't work in your favor, then it becomes a conversation of finding an insurance company that is willing to take on the financial risk. Now, this is the reason why asking an insurance professional, "Hey, what are your rates? Hey, Leo, what are your rates? Yeah, how much is it going to be? What are your rates?" That question up front really doesn't serve you, because in all actuality, it really depends. The price of your policy requires a deeper conversation about what you're trying to accomplish, and the conversation must take into consideration the 4 components that were just previously listed. You already know what I want you to do. Now, if you found this information helpful and valuable, you know what I want you to do. I want you to click like, and I want you to share this information with your family and friends, because you know this was a message that they need. But also, if you're currently uninsured or you need to upgrade your existing policy, only thing you need to do is click the link in the bio and tap on the first button. Let's get to it. Yeah, Leo, I'm just calling because I want to get your rates. I just want to get your rates. Huh? Your rates.